Hello friends, welcome to my channel. This is CA Rakhi Agarwal. Today's topic is related to Indian Accounting Standard 16, which deals with property, plant and equipment. We get to know how many standards are there, how many accounting standards in India and globally which deals with property, plant and equipment. In India, there are the old accounting standard, that is accounting standard 10, which deals with property, plant and equipment. Then after that, Ind AS came into existence, which is the converged form of IFRS or IAS, which the India has adopted, that is Ind AS 16. And in globally, the company prepares their financial statement IAS 16, which is the globally accepted standard, that is IAS, which deals with property, plant and equipment. In India, there's two accounting standard, that is the old accounting standard 10 and Indian accounting standard 16, which deals with property, plant and equipment. And globally, the company follows IAS 16, that is International Accounting Standard. So these are the types of accounting standards which the company follows in India and globally, which deals with property, plant and equipment. So these are the standards. And what we will include? What do you mean by property? Property means land and building, which is used for the business purposes, and which is used for manufacturing of an item, which is used for administrative purpose, which is used for renting purposes, which is used for supply of goods and services, and from which we get any economic benefit. Plant means any machineries which used in the production, and equipment means office equipments, laptops, projectors. All these are the examples. What are the examples of property, plant and equipment? Like land, building, installation, electrical installation, laptops, generators, refrigerators, computers, office equipments. All these are the examples of property and plant and equipment which we deals with, except in some cases of land and building. So we will discuss one by one. So let's start. Firstly, we get to know what we will study in Ind AS 16. What we will discuss in this standard. In this standard, in this Indian Accounting Standard 16, we will get to know about the objective of the property, plant and equipment. Why these standards deals with what was the purpose of this standard. Then we will get to know about the scope of property, plant and equipment, scope of this standard, definition of property, plant and equipment. Then we will get to know about the recognition criteria, how we will initially recognize the cost of PPE and its element, then subsequent recognition criteria, how we will recognize the subsequent cost of PPE, its measurement principles, then initial measurements, then subsequent measurements, then what model we will going to follow for PPE, like cost model, evaluation model, how the depreciation, what is the purpose of depreciation, how depreciation is to be calculated on these property, plant and equipment, what method is to be used while preparing, what method is to be used while charging depreciation on it, some concept related to impairments. Impairment is generally deals with Ind AS 36, but in this Ind AS we will just touch the concept of impairment, its compensation, and the process of derecognition of assets We also get to know the process of de-recognition, how we will de-recognize the asset from PPE, and what was the disclosure procedure of disclosure in the financial statement, how we will disclose the property, plant and equipment in the financial statement. So these are the contents which we will going to discuss one by one, and this content is not covered in one video. It will take 2 videos to complete the property, plant and what is the objective of Ind AS 16? What was the purpose of Ind AS 16? What Ind AS 16 deals with? It prescribes the accounting treatment of property, plant and equipment. How the company deals the accounting treatment of property, plant and equipment. How the company recognize its asset in the books. It deals with that. The recognition criteria. It says about the recognition criteria, measurement principles of an asset. How the company recognize its cost, initial cost and subsequent cost in the books. What condition they will take into consideration while recognition of its asset. So Ind AS 16 also says about the determination of the, it helps to, Ind AS 16 helps the company to determine the carrying value of the asset. How the company determine the carrying value of its asset. Then how the company will charge is the depreciation on the value of the asset. What was the process of depreciation? Which method is to be adopted by the company? It will, Ind AS 16 helps the company, says the company to adopt the which method the company is going to adopt. It says about the method, the process of charging depreciation. It also says about the concept of impairment losses. So Ind AS 16 says the company, how the company will make the accounting treatment of property, plant and equipment, how the company recognize that property, plant and equipment in the books, how the company will determine the carrying value, how depreciation is to be charged, which method is to be adopted, and if there is an impairment, how the company will be apply that impairment losses in the books, in the property, plant and equipment. So these are the objectives with these. Now what is the scope? Scope of these is standard Ind AS 16. What was the scope? Scope includes all kind of assets. Ind AS 16 is applicable to all kind of property, plant and equipment except some of the items, some of the assets, because these assets deals with another accounting standards, another Indian accounting standards. So Ind AS 16 does not deal with that kind of assets. There are many assets in our Ind AS, like some of the assets are current assets, like the asset which is held for sale. Some of the assets are biological assets. Some of the assets are investment properties. Some of the assets are like mineral and evaluation and exploration assets. For these kind of assets, another accounting standards are there which deal with that only. So Indian accounting standard 16 applicable to all kind of property, plant and equipment except these kind of standards, because there is a separate standard for that assets. Like for example, if any asset is held for sale, then that asset is to be treated as a current asset, and there is a separate standard for that asset treatment which deals with which says in Ind AS 105, because Ind AS 105 which deals with property, plant and equipment which is classified as an asset held for sale. What do you mean by an asset held for sale? This is explained by example. Suppose there is an asset. There is a company like, you will take the example of Wipro. Wipro is an IT company. And if the Wipro purchase any motor car or any car for their or its business use, for its business purposes, for the use of business purposes, then that asset is to be treated in the books of Wipro as a property, plant and equipment. But after some times, that asset Wipro want to sell. Within after 2-3 years of use, the Wipro want to sell that asset and recognize that asset as a current asset, and because Wipro want to sell, and that asset they will recognize as a asset held for sale, then that asset is to be treated in the books of Wipro as not PPE, and but it will be treated as Ind AS. It will be treated according to the Indian Accounting Standard 105. But take another example like Maruti Suzuki. Maruti Suzuki generally deals, it is an automobile company. It generally deals with the purchase and sale of motor cars, motor vehicles, all these. In the books of Maruti, the motor cars is not treated as an asset, not treated as a PP. It will treated as an inventory in these books, because their general business is the purchase and sale of motor cars. They will not treat that motor car as property, plant and equipment. They will treat that motor car as inventory. That motor car is to be taken as inventory in the books of Maruti Suzuki balance sheet. So that is an inventory for Maruti company. But for Wipro, if the Wipro purchase that Maruti car in order to use for its business purpose, then that car is to be treated as PP, property, plant and equipment, and its accounting treatment is according to Ind AS 16. So this is the example. So Ind AS 16 is applicable to all kind of property, plant and equipment except Ind AS 105, which deals with property, plant and equipment. Whatever the property, plant and equipment which is classified as held for sale. The biological asset. Ind AS 16 is not applicable on biological asset, because there is another standard for this biological asset which is related to agricultural activity. There is another standard, that is Ind AS 41. Ind AS 41 deals with biological asset. Biological asset means living animals and plants which is related to agricultural activity. So any animals or plants which is related to agriculture activity, that is treated under Ind AS 141. But if any animals which is used for business purposes, like transportation of carriage of goods from one place to another, animal used like camel, like bullock cart, like if the animal is used for carriage of goods from one place to another, then that animal is to be treated under Ind AS 16. But if any animal is used for plowing the agricultural field, then that animal is to be treated under Ind AS 41. If any animal like a horse is used in horse race, like in there is a horse race or there's, so the horse is used, that is a gambling, but that horse race is a kind of business, and that horse is an asset for that company. So that asset, that horses is to be treated under Ind AS 16. And in circus, if the animals are used to entertain the public, and the life of the animals are more than 1 year, and they are used for business purposes, then that animal is to be treated under Ind AS 16. They are treated as PPE for the company. They are not used for agriculture purpose. So that kind of animal is treated under Ind AS 16. But if any animal is used for agriculture activity, then will be treated under Ind AS 41. And in case of plants, if any plant is used for agriculture activity, then that will be treated under Ind AS 41, except the bearer plant. Why bearer plant? What is the meaning of bearer plant? Bearer plant means the plant which give production in every year. In the year in which the plant is made, and in the subsequent year also. Means 20 years or 30 years, we will get the fruit from that plant. Like for example, mango plant. Mango plant give mangoes every year, not in the year of plantation only. They are subsequent year also we will get the mango from that plant. Like apple plant, like coconut plant. These are the bearer plants, and it's a kind of asset for the company. And the economic life of the useful life of that plant is more than 1 year. So it will except bearer plant, if any agricultural biological assets is there, like living animals or plant related to agriculture activity, that will be treated under Ind AS 41. But bearer plant is there, they will be treated under Ind AS 16. Means Ind AS 16 is not applicable on measurements and recognition of exploration and evaluating assets, and also in mineral rights and mineral reserves such as natural oil, gas, and similar non-regenerative resources. These standard deals with the applicability of PPE which are used to develop or maintain the above assets. Which means Ind AS 16 is not applicable to recognition and measurement of exploration and evaluating assets such as mineral rights, mineral resources like natural gas, oil, and non-regenerative resources. But the assets which is used to dig that mineral resources, that oil, the crane which is used for digging that or excavating that resources from the mines, that asset, that cranes is to be treated as a property, plant and equipment. But that resources is not treated as a property, plant and equipment, but the cranes or big machineries which is used to dig or evaluate, excavate that resources from the mines, that machineries is to be treated as property, plant and equipment, and with deals under Ind AS 16. Now comes what is the definition of property, plant and equipment. Property, plant and equipment, in short we are saying PPE. PPE are tangible items. Tangible means which we can touch and feel, and the tangible items which are held for use in the process of production, in the manufacturing process, the asset which we used in the process of production, like big machineries which we use in the production process, or supply of goods and services, that is supply of goods, like for supply of goods and services we use trucks or bullock carts or camels. For supply of goods and services, the asset which we use, or for rental purpose, like machineries or motor car we give on rent, that asset is also be treated under as PPE. Like big machineries or motor cars on marriage ceremony, the people hire motor cars on marriage ceremony, like so that motor car is to be treated The person who is giving that motor car treat this motor car as an asset in their books, that is used for rental purposes, for administrative purposes, any asset which is used for administrative purposes, and the expected life of that asset is more than 1 year, then that asset is to be treated as property, plant and equipment. There is some exception to that. In case of land and building, if it is used for renting purposes, then that is not treated as a property, plant and equipment and under Ind AS 16. Because if the land and building is given on rent, it is a kind of investment and it is covered. There is a separate standard for that under Indian accounting standard, that is investment property under Ind AS 40. Ind AS 40 deals with investment property, which generally deals with the renting of land and building, how to recognize the land and building for renting purposes. And also there is another standard 116 which deals with leases. If the land is taken on lease, if the building is taken on lease, how the company treat the accounting treatment of leases under Ind AS 116 and the accounting treatment of investment properties under Ind AS 40, which deals with land and building which is used for renting purposes. So these land and building is not recognized under Ind AS 16 as property, plant and equipment. And if the life of the asset is less than 1 year, it will be not treated as property, plant and equipment. There is two exceptions. One is if the land and building held for renting purpose, then it will be treated as investment property, and there is a separate standard for that under Ind AS 40 which deals with investment property. And there is another, if the useful life of asset is less than 1 year, then it will not be treated as a property, plant and equipment. Then recognition criteria. Initial recognition. What was the criteria the company is going to check while recognizing its asset? What was the criteria? The cost of item will be recognized as PPE if the following conditions are satisfied. The company will check the criteria. There is two criteria the company is used to check while recognizing the cost as PPE. The initial cost of PPE is to be recognized only when these two conditions are fulfilled. Cost can be measured reliably. We can easily find the cost of the assets. We can measure the cost easily, reliably. And the asset which we are recognizing as a property, plant and equipment, there is some future economic benefit which the company derives from that asset. There is a probability that the company will gain some benefits from that asset, from use of that asset, which flow to the entity. So then only the company will recognize that asset as a property, plant and equipment. If any machineries which is give the company some useful, some benefit, then only company will recognize that asset as a property, plant and equipment, and the cost can be measured reliably. So these two are the conditions. It is probable that future economic benefit will flow to the entity and the cost can be measured reliably. These two conditions if fulfilled, then the company will recognize that cost as a property, plant and equipment. These are the criteria. And in case of spare parts, standby equipment and servicing equipment, what will be company will check? Company will check firstly the criteria. The useful life of the asset is more than 1 year, then only it will recognize that spare part, standby equipment and servicing equipment as property, plant and equipment. Then they will check that the spare part is used for production purposes, for administrative, they will check that, and there is some future economic benefit that flow from that asset to the entity. then only that spare part will be recognized as a property, plant and equipment. Means if the spare part useful life is more than 1 year and it will flow some economic benefit to the company, then only that spare part will be recognized as a property, plant and equipment. And if the useful life of spare part is less than 1 year, then it will be treated as an inventory. Safety equipments. What was the condition of safety equipments? Like, we will take the example of fire extinguisher. Why fire extinguisher is to be used? It is not used for production purpose. It is not used for supply of goods and services. It is not used for renting purposes, and it is not used for administrative purpose. So it not satisfying the definition of property, plant and equipment. So why we will treat the fire extinguisher as a property, plant and equipment? Why we will include that fire extinguisher as a property, plant and equipment? Because it is governed by law. The law says if any safety equipment is used to protect the business from any mishappening, then that equipment is to be taken as property, plant and equipment. Because we are taking the example of fire extinguisher, because fire extinguisher is governed by law, which indirectly supporting the business to continue as a business. Means fire extinguisher not directly utilized in the production process, administrative purposes or supply of goods, but it indirectly helps the business to run. These kind of equipments does not give any direct benefit, but in order to protect from any mishappening in the business, these equipment is to be used. So Ind AS says that treat these items as PPE, property, plant and equipment, although they are not giving any direct benefit, but these items help the business to run safely. So these fire extinguisher, these safety equipments is treated as a property, plant and equipment. Subsequent cost. How the company will recognize the subsequent cost? What was the criteria of the subsequent cost recognition? The criteria will be same as initial cost recognition. The criteria of initial cost recognition is same for the subsequent cost recognition also. Whatever criteria is there for initial recognition, same criteria is followed for subsequent cost recognition. Like, we have to check the economic benefit derived from that asset, that flow to the entity, future economic benefit is there or not. The cost can be determined reliably. So if the conditions meet, then subsequent cost is capitalized with the respective asset in the form of replacement cost. Subsequent cost is what cost? We will capitalize in the respective asset the cost which is very major cost. If the cost is minimal, like the cost is very minimal, suppose the asset cost is 10 lakhs and cost is around 10,000, then that cost is not capitalized with the asset. That cost is to be charged to P&L, because day-to-day servicing cost of any motor car or any machinery is to be charged to PL. But if the cost is major cost, like the cost of asset is 10 lakhs and the replacement cost is 4 lakhs, then that cost is a major cost, then that is to be capitalized. And if the company get any future benefit from that cost and subsequent cost and the economic life of that replacement part is more than 1 year, then it will be capitalized with the respective asset. Like, we will take the example of engine. In case of motor car, if the company replace engine of the motor car, that is the major cost which the company incur, and that cost is to be capitalized with the respective motor car. and only major cost is to be capitalized, like major inspection cost or overhauling cost. Inspection cost incur in case of aircrafts. Like aircraft is a asset for the company, and in every intervals there is an inspection cost which is very major, and that cost is to be capitalized with the respective asset with the cost of aircrafts. And if there is a day-to-day servicing charges of the assets like labor consumable need to be expensed off, means is to be charged to P&L as repairs and maintenance cost. That cost is not to be capitalized, it should be charged to PL as repair and maintenance. Now we are taking the replacement of part or subsequent cost. The item which are series of linked part which require regular replacement at different intervals, different useful life. The carrying amount of the item recognize the cost of replacing a part is when the cost is incurred if the recognition criteria is satisfied. The carrying amount of replaced part is de-recognized. It means if the cost is incurred and the recognition criteria satisfied, then the cost of replacing of part is to be taken into consideration. And after that, we will de-recognize the old part cost. Carrying value of the replaced part is to be de-recognized from that asset. Suppose we are taking the example of engine of motor car. Suppose the company has purchased a motor car of 10 lakhs on 1st April 2013 and the useful life of motor car is 14 years. And on 1st April 2022 the company has replaced the engine, which is the major part of the motor car, which costs rupees 4 lakhs. That 4 lakhs is to be added as a subsequent cost to the cost of asset, to the motor car, because it will that the cost of the engine is a major cost. 4 lakh is the major cost, and the engine is the useful life of engine is more than 1 year, and it derive future economic benefit to the asset, to the company. So it will be treated as a subsequent cost and it should be capitalized with the respective asset. But at the same time, the company de-recognize the cost of old engine from the cost of motor car. So these 10 lakhs at the time of purchase, the company has purchased the car along with engine. So these 10 lakhs include the cost of engine. So company has to evaluate from that 10 lakhs the cost of engine. So from this example, we are not going to know separately what was the cost of motor car and what was the cost of engine. So if it is not identifiable, then if it is directly identifiable, then we will take the value, that value to for derecognition purposes. But if it is not identifiable, if the cost is not identifiable separately, then the company will follow the discounting factor to derive the original cost before at the original cost of that engine at the time of purchase. So how to de-recognize the value of old engine from the cost of motor car? The value is identifiable at the time of purchase. Use that value for de-recognition purpose. If the company is able to identify the cost of motor car along with that of engine separately, then they will use that value for de-recognition purposes. But if the value is not identifiable separately, then the company use the discount factor. Means the company use the current value, means today's rate. What was the cost of machine today on the date of replacement? that is on 1st April 2022, the cost of machine, the cost of engine is 4 lakh. They will use that value and they will discount that value to derive at the present value at the time of purchase, to derive the value of that engine at the time of purchase of motor car, that is on 1st April 2013. What was the value of engine? They will use by using this, they will find by using discounting factor. So today the cost of engine is 4 lakhs, the discounting rate is 10%, and the present value before 10 years back, because it will purchase on 2013 and the company has replaced that engine on 2022, means it will be almost 10 years and the useful life of asset is 14 years. So before 10 years, what was the value of that engine? The company derived by using discounting rate. So how to find the discounting rate? They will use the discount rate, that is 1 divided by 1 plus 10% to the power of 10 years, because 10 years back we are finding the value of that engine before 10 years back. So it comes 0.386. Then we will multiply that factor with the current value, today's value of that engine, the value of engine as on 1st April 2022, that is 4 lakhs, to determine, to find the value before 10 years back. So it will comes 1,54,270. So from total cost of that motor car, 10 lakhs is the total cost of car. We will deduct that the cost of engine to get other than engine cost, that is 8,45,782. So the original cost of motor car is cost of existing engine, that is 1,54,217, that we will derive by using discounting factor. Other than motor car, the cost is 8,45,783, that we will deduct from 10 lakhs deducted 1,54,000, that is the cost of engine. So we will charge depreciation up to 10 years, because we use that motor car up to 10 years. Then the useful life of the motor car is 14 years. So 4 years are remaining for the useful life of that motor car. So we will deduct 10 years depreciation from that asset to get the net block. So this is the cost of the existing engine and the cost of other than existing engine. Now we will find the revised cost. We will find the old cost of the engine and then we will find the revised cost of motor car after at the end of 10 years. That is the cost of engine of new car engine. The cost of new engine is 4 lakhs and cost other than new engine is will be 8,45,783, which is the cost other than old engine. So the total cost will be, means cost of 10 lakhs, that is the cost of motor car, from which we will deduct the old cost of old engine, and we will add we will deduct the cost of old engine after depreciation, and we will add the cost of new engine, because depreciation is not charged on the new engine, because at the date of purchase of you are calculating the value at that time. So that we will determine that. So 4 lakhs is the cost of new engine and cost other than new engine is 8,45,783, which is the WDV as on the date of purchase of new engine. So total will be this. Then we will charge depreciation to derive at the net block. So it will be 6,45,000. 41,000, and the prospective depreciation will be on the remaining useful life, which is of 4 years. So we will charge depreciation accordingly. So in 6,41,652 is divided by 4 to get the accumulated depreciation of 1 year annually, that is 1,60,413. This is depreciation on remaining useful life, that is 4 years. And the accounting treatment is, firstly we will determine the cost of new engine. We will debit the cost of new engine because we are purchasing that. So cost of new engine is to be debited by 4 lakhs, and we will credit that with bank because we are paying for that. So cost of new engine account debit to bank 4 lakhs and 4 lakhs, and we will de-recognize the cost of old engine from the respective asset. So we will credit the old engine cost, that is 1,54,217, and we will debit with the depreciation on that for 10 years, and the differential will become the loss on the sale of engine. That is the accounting entry. How the company will recognize the major inspection cost which is related, which incur subsequently after the purchase of asset, means subsequent cost related to major inspection cost. How the company deals with. Ind AS 16 says that major inspection cost which is on regular basis, in order to run the machine perfectly, properly, that cost is to be capitalized with the respective asset. Means we are taking the example of aircraft. In order to run that aircraft, at regular intervals there is some cost incur. That cost is related to inspection cost. No, at regular intervals, inspection cost incur in case of an aircraft, because to check whether the aircraft is running properly or not. Aircraft is perfectly okay, but still that cost incurred to check the condition of the machinery, and that cost is incurred on regular basis, and that cost is not one to amount is not so minimal. The inspection cost which incur related to an aircraft is a major cost. Like if that cost is to be capitalized with the respective asset, and the treatment will be same as that of the which we will discussed previously. Like we have to check the carrying value of the asset. We will get the economic benefit. The useful life of the asset is more than 1 year, and we will get that economic benefit from that asset or not. We will check the criteria. The cost of each major inspection will incur at every interval is recognized in the carrying value as replacement cost if the recognition criteria are satisfied. Any remaining carrying value relating to the previous inspection, like for example, at regular interval the aircraft is inspected, because at the time of purchase the company incurred 85 lakhs on the cost of aircraft, and 5 lakhs is related to inspection cost. That inspection cost is at the time of purchase of asset, aircraft which is already inspected. Inspected aircraft is given to the company and taken on that the 5 lakh rupees related to inspection charge. At every regular interval, the company has to incur the inspection charge. That is, after 3 years, the company has to incur that charges. So, After 3 years, the company incur inspection charge, which is of 10 lakhs. Whatever the company incurs some charges on that, which is major inspection cost. So that cost is to be added with the respective asset, and the previous old inspection cost is to be de-recognized from that asset. And there is a separate useful life of aircraft and inspection charge, then depreciation is to be charged according to the useful life of the asset. Mean that if the useful life of the aircraft is 10 years, then depreciation is charged on the cost of aircraft 10 years at 10 years, and if the useful life of inspection cost is 3 years, then it will be charged on the 3 years only. So any remaining carrying amount relating to the previous inspection is de-recognized irrespective of whether previous inspection were separately identified and depreciated. If the cost of asset in our case is aircraft and cost of inspection having different useful life, then charge accordingly. If the cost of assets means cost of aircraft and cost of inspection having a different useful life, then depreciation is charged accordingly. We will take the example. Suppose the original cost of aircraft is 85 lakhs and inspection cost on it at the time of purchase is 5 lakhs. Under civil rule, aircraft require major inspection cost after 5 years. Means inspection cost useful life is 3 years and the useful life of aircraft is 20 years. So depreciation is to be charged accordingly. On the aircraft it will be charged on 20 years and inspection charge it will be charged on 3 years. After 3 years, the major inspection cost, after 3 years they are incur another major inspection because civil rule aircraft require inspection cost after 3 years. So inspection cost incurred, that is 10 lakhs. So the revised cost of aircraft is original cost of aircraft minus accumulated depreciation. After 3 years, having useful life of 20 years. Means the original cost of aircraft is 85 lakhs and we will charge depreciation on it because the useful life is 20 years. We will depreciate on the 20 years. So we will depreciate the 85 lakhs divided by 20 into 3 because 3 years already passed for using that assets. So we will charge depreciation for 3 years by using the useful life of 20 years. And how we will determine the revised cost of inspection? We will determine the original cost of inspection, that is of 5 lakhs. We will charge depreciation for 3 years which become nil. We also de-recognize that existing inspection cost. We will also de-recognize that cost which is 5 lakhs and we also recognize the new inspection cost which is 10 lakhs. So original cost is 5 lakhs. We will depreciate for 3 years which becomes nil. We will de-recognize if the depreciation is not charged, then we will de-recognize, means 5 minus 5 will become 0 and we will recognize the new cost of inspection, that is 10 lakhs. Measurements of initial recognition. We will determine the cost which we will initially recognize at the time of purchase of that asset. What elements we are taking into consideration while recognizing the value of asset? We will take into consideration the purchase price. At what price we will purchase that asset, including import duty. If we are importing that asset, then we will include the importing duty and non-refundable purchase tax. Non-refundable purchase tax means, refundable purchase tax means we are getting some credit of that taxes. Suppose we are paying some GST and we are getting some credit on from that taxes, then that is refundable, and we are not getting any benefit from that taxes paid, then that taxes is non-refundable purchase tax. Like, so purchase price includes import duty and non-refundable purchase tax, and from that we will deduct the trade discount and rebates. So that is the we will take into consideration while initially recognizing the value of asset. Then we will take also the directly attributable cost. What do you mean by directly attributable cost related to asset? Means if we are purchasing any asset from outside India, then that asset, suppose we are purchasing from Japan some machinery, and that asset came to India, then for there is some import duty on it, then there is some custom duty on it for importing that asset, then there is some freight charges, there is some clearing charges, some transportation cost to bring that asset to the warehouse of the company, then to bring that asset to its present location and condition. Present location and condition means where the asset is actually used for production purposes. Till that, whatever the expense incurred in order to bring that asset in its present location and condition, that expenses is to be capitalized with the value of the asset. That is the directly attributable cost, which is to be added with the purchase of the assets, with the cost of the assets. Means the transportation cost in order to bring that asset to the factory location where the asset is actually used for production purposes. The cost which is incurred for installing the machinery, the cost which is incurred for testing the first production, whether the production is actually good or not, the testing cost, that all directly attributable cost which is related, which is incurred to bring that asset to its present location and condition, which is necessary for its intended use by the management, all that cost is to be added with the cost of machinery. And another cost is initially estimates of dismantling cost or removing cost or restoring cost which incur after lease period is over. It means that these costs generally incurs in case of telecommunication, in case of dismantling cost is generally incurred in case of oil business, in case of mineral business, in case of telecommunication business, because they generally purposely build some. In case of telecommunication, they built a tower on building or is built on leased area, and after 20 years they have to remove that tower from that building. Removal, there is some expense incurred to bring that asset to its restoring condition, to its original state, cost which is incurred by the company. That cost is to be estimated, because after 20 years what was the cost and what was the present value of that cost today is to be determined, and that cost is to be added from the value of that asset. Because after 20 years, what was the cost incurred to dismantle that tower to bring that area in their original condition, that cost is to be recognized today only. So what was the cost incurred after 20 years? We have to make find out by using the inflation rate, by using the future cost of that restoring charges or dismantling charges after 20 years to bring that asset to their present condition, to their original condition. And then after future cost, from that cost we determine by using discounting rate the present value of that cost. What was the cost today? That cost is to be recognized or is to be added with the cost of asset. So this dismantling cost we will explain via example. Suppose the cost of dismantling is 1 lakh. Today the cost of dismantling, if we will dismantle today, then that cost will incur 1 lakh. After 20 years, what was the cost we don't know. So we will use the inflation rate to determine the cost after 20 years. So future cost after 20 years, when the tower is dismantled, then we will use the 6% rate, that is the inflation rate. That is 1 lakh multiplied by 1 plus 6% to the power of 20 years, because we will determining the future value after 20 years. So it will be 3,20,740. That 3,20,000 is the cost of dismantling after 20 years. So we will bring that future value to its today's cost. What was the present value of that dismantling cost? We will use the discounted rate, which will be 10%. So we will make the discount rate, use the discount rate to determine. So we will to find the present value of dismantling cost, that is 3,20,714, which is the future cost after 20 years, which we will divide by 1 plus 10%, that is the discounted rate to the power of 20, to determine the actual dismantling cost which will incur today, that is 47,672 will be added to the cost of asset. So this is not actually paid by the company. This is the provision which the company may make. This is an obligation for the company which will be they incur after 20 years. So they will make an accounting entry like that only. They will make the obligation asset account debit, that is 47,672, to asset retirement obligation liability. They will create the liability for that 47,670 every year. Some examples of directly attributable cost. What are the directly attributable cost? Cost which is related to bring the asset to its present location and condition necessary for it to be capable of operating in the manner intended by the management. Suppose any cost which incurred, like site preparation cost, like installation cost, any cost which is incurred to prepare a site to fit the machinery, that cost is to be added as a directly attributable cost. Installation of machinery, without installation the machine will not run, that cost is to be added as a directly attributable cost. Handling and initial delivery, because the handling cost and delivery cost is to bring that asset to its present location where actually the machinery is used for production purposes, then that cost is related to directly attributable cost. Any professional fees paid which is related with the operation of the machinery, how the machinery is operated. So some professional has given the how to the because big machineries are not operated in a common way, they need some expertise. So how they train people for using that machineries, so they are paying some professional fees for use of that machineries, and that machineries if is used for that purpose to how to uh, run the machinery properly, and if any professional knowledge is required and any professional fees for paid for by the company for that training, that becomes the part of directly attributable cost. Cost of testing, Cost of testing means the company has generate some production in order to test that the machinery is properly running or not. And from that production, the company earns some revenue. So that revenue is reduced with the cost of testing. And if the cost of testing is suppose 10 lakhs and the revenue incurred for the testing production you generated from by testing purposes, and the company has sold that production suppose 5 lakhs, so that amount is to be reduced with the cost of testing, and that amount is to be added with the attributable cost. Suppose installation and assembling cost. Borrowing cost. Suppose company has taken loan and then purchased an arm machinery. So if the asset is a qualifying asset, then that asset, and company pays any interest on that, then that asset is to be capitalized with the respective asset. If the asset is not a qualifying asset, then that is to be charged to P&L. And if the company parks some amount which company has borrowed in order to purchase that machinery. Suppose company has borrowed 10 crores and company used only 6 crores to purchase that machinery, and in the process it will take 15 or 16 months to run that machinery properly. So it will a long process. So company has parked that remaining amount for short term period, so that interest is reduced from the borrowing cost. These are all costs are directly attributable cost, but there are some examples which are not directly attributable and which is not added to the cost of machineries, and that cost is to be expensed off, that is charged to P&L, like staff training expenses. Relocation cost. Advertisement and promotion of new product. Company has launched a new product and the company has advertised, make some expenses related to advertisement and promotion of that product. So that cost is to be charged to P&L, not added to the cost of machinery. Administrative cost, any other general overhead cost, all are expensed off, not added to the cost of respective assets. Then decommissioning. We had known that we had taken the example of tower, that the dismantling cost, the cost which we incurred for dismantling of an asset to bring that asset to its present location and condition in an original form. The cost towards dismantling and removing the asset and restoring the original site after it. Means after 20 years, the tower is dismantled from the building, and the building, the expense which is incurred to bring that building in its original form after dismantling. So what was the cost incurred? That is the decommissioning cost. For example, property will be returned in the same condition, that is original condition, at the end of the lease. After 20 years, the cost incurred to bring that property in the same condition, that is in original condition. Recognize asset obligation and liability as per Ind AS 37. This recognition deals with Ind AS 37. So recognize obligation and liability accordingly. Generally, decommissioning cost, this type of a situation arises in case of oil and gas industries, telecommunication industries, mineral industries and electricity industries. All these industries generally decommissioning cost incurred. Then comes deferred payment credit. What does it mean? Suppose if we are purchasing an asset on cash basis, motor car we had purchased on cash basis and we are paying instant cash and purchase the asset from our own fund, then that asset is to be recognized at the whatever the price of the motor car is. But if we are deferring the payment of that motor car for more than 1 year, that is for 2 3 years or 5 years, we have taken loan and then we had purchased that car, then we have to pay some interest on that car, cost of that car. Suppose we had purchased the cost of that machinery or car, today's price if we are paying on cash, we are getting that asset on at rupees 10 lakhs. But if we are paying, we say that buyer, look, we are going to pay that amount on 5 years. So we have to pay more than 10 lakhs because interest component is there along with the purchase price of that asset. So cost of item of PPE is the cash price equivalent at the recognition date. In case of deferred payment beyond credit period, means beyond if the credit period, which means difference between the cash price equivalent and total payment. We had paid, total payment is recognized as an interest and it is to be charged to PL over the period of credit. Means total payment whatever we made in case of deferred payment credit, we are taking the deferred payment credit, then we have to pay more than the price of the asset. That is, if the price of the asset today is 10 lakhs, we have to pay 15 lakhs for that. And that 5 lakhs is related to the interest part. And that interest part is to be charged to PL over a period of credit, means 5 years. So total payment is 15 lakhs and the cost cash price equivalent is 10 lakhs. So that 5 lakhs is the interest part. Unless such interest is capitalized as per Ind AS 23, unless and until that interest is to be capitalized as per Ind AS 23, which deals with borrowing cost, tells that such cost relates to qualifying asset, they only that interest expense is capitalized, otherwise it will be charged to PL. Means if the company borrow some amount to purchase an asset and pay some interest, and it satisfies the condition as per Ind AS 23, which deals with borrowing cost and which satisfy the condition of qualifying asset, then that interest is to be capitalized with the respective asset. Otherwise, if they are not satisfying the condition, then it will be charged to P&L as an interest over the credit period. So this deferred payment credit is explained by example. This is explained. Suppose company has purchased a motor car on credit payment term at 15 lakhs. Means credit payment term, the price of credit payment terms is 15 lakhs and date of purchase is 1st April 2020. Payment term is the company will pay to the at 3 installment and interest rate will be 6%. So this installment the company will pay in 3 installment and the payment process is 5 lakh, 5 lakh, 5 lakh in each year. So what was the present value of that 5 lakhs? Because that 5 lakh include interest part also. Because the company has purchased that asset on credit payment terms basis. So on 1st April the company is paid 5 lakhs. That is the down payment. We first calculate the cash price equivalent. What was the cash price equivalent of that asset? So we will use the present value factor. So In year 1 there is a 5 lakh payment and which does not include any interest. So the present value factor will be nil and the company multiply with 1 equals to 5 lakh is only the principal part. In year 2 the company pay 5 lakhs and to bring that at the rate of 6%, the present value of that 1 divided by 1 plus 6% equals to, which comes to 0.943, and 5 lakh multiplied by 0.943 we determine to get into the present value of the motor car on year 2, that is 4,71,690. And on 1/4/2024 the company pay 5 lakhs which includes interest, and the present value of that, the cash equivalent price of that is, we will determine by present value factor at the rate 6%, that is 0.943, which is the previous factor, divided by 1 plus 6%, which comes to 0.890, which we will multiply with 5 lakh to bring at the present value of motor car at the year 3, that is 4,44,990. So the total cost, cash price of that motor car, the present value of the cash price or present value of the motor car equals to 14,16,696, and we are paying 15 lakhs. So the differential part is the interest part. So how we will get into? We will calculate the interest component on it. In year 1, the opening balance is, the value of the motor car will be 14 lakhs, which we will determine the cash equivalent, that is 14,16,600. Interest on it will be 0. We are paying 5 lakhs, that is the principal amount, and the closing value is 14 lakhs minus 5 lakhs, that is 9,16,696. That closing balance is the opening balance of the next year. So we will charge interest on it to bring at 55,000 will be the interest on that, which we are going to pay 5 lakhs, and the principal amount is on, that is, what was the principal amount? The 5 lakhs minus interest, that is 5 lakhs minus 55,000, which comes to 4 lakhs 44,998. That is the principal amount, because we are paying 5 lakhs, which is inclusive of interest. So we bring the interest 55,001, and we reduce that interest from the total amount to get the principal amount. And the closing balance will be the opening balance plus interest minus the payment which he has made. So that will be the closing balance, in which we will charge interest to bring a 6% rate of interest to bring at the value of interest, that is 28,302, and then we make a payment of 5 lakhs, and from 5 lakhs we reduce the interest to bring the principal amount, and that principal amount is paid. Principal plus interest is to be paid, that is 5 lakhs, and the closing balance will be the opening balance, that is 4,71,698 plus interest part, that is 28,302, minus the payment which has made, that is 5 lakhs, to bring the value nil. So year 4 in 2024 the value closing balance become nil because it is fully paid. So today we have discussed some of the concept of property, plant and equipment. In next video also we will continue our topic, because it is not possible to continue in one video, so we had deferred the video in two classes. So if you like, please subscribe my channel, please share and please comment. I am giving lot of my effort to bring some important videos for the viewers. So if you like, please share, subscribe and comment. thanking you for watching my video.